Coming up on Business Incorporated, G7 nations boost COVAX in global vaccine efforts in lower-income countries. And PwC predicts South Africa's economic rebound could more than double this year. And Ghana ranked 15th in Africa in 2020 United Nations Development Index. Hello and welcome to the show. I'm Ladi Williams. We begin our Friday show with market numbers from the African continent. Major markets we tracked were mixed at intraday. South Africa's GSE rose 0.33%, while the NSE sustained the bearish sentiment, declining 0.13%. And Egypt's EGX30 ended the week negative on Thursday by 0.29%. Kenya closed Thursday's session negative. And major markets in the Gulf region ended the week negative on Thursday, except the Abu Dhabi index, which added 0.12%. Elsewhere, Dubai's index fell the most, shaving off 0.70%. The Qatari index is next in the trail of losses, falling 0.67%, while Saudi Arabia's market lost 0.66%. And European markets opened cautiously high on Friday as investors monitor rising bond yields, corporate earnings, and a batch of key economic data out of the Eurozone. Let's take a trip to Frankfurt, where Chelsea is standing by to tell us more. Thank you for joining us, Chelsea. Germany's economy actually grew in February despite being in lockdown, according to new data. How did Europe's largest economy manage to pull that off?
Well, the German economy is very much being driven right now by the manufacturing sector. So throughout this pandemic, we've seen the service sector of really the entire global economy get hit really hard. So restaurants, bars, retail stores, hospitality, hotels, all of that has been shut down for months here in Germany and across Europe. So that industry is really suffering. But it hasn't really filtered over into the factory side of the economy. And for Germany, that's extremely important. Germany is very export dependent, so its economy very much relies on what's going on, for example, in the auto industry or in the electrical manufacturing industry. So we have seen those industries doing very well and continue to do well, even in February, as we've seen lockdown measures extended, as we've seen border closures start to wreak havoc on supply chains. Even with all of that, the German economy, the German manufacturing sector is really going strong, and we've actually seen this in today's data out from really the entire Eurozone. Many economies are seeing this two-track system here, where the service sector is doing quite poorly, but the manufacturing side of the economy is doing very well. So this is a trend not only in Germany but across the entire Eurozone.
And looking at fashion now, luxury brand Hermès is also seeing growth. The company said its sales rose 16% in the fourth quarter. Can you tell us more about this?
This is really a blockbuster quarter for Hermès. If you look at their results, sales, as you mentioned, up 16%. That's about twice as much as analysts had been expecting. And we've seen the stock hit a record high today, up about 9% at one point because of these outstanding results, really. And Hermès is really seeing a lot of strength, in particular in the Asian market. Many luxury brands are very dependent on Chinese consumers in particular. And the Chinese economy has recovered much faster than the rest of the world. So we have seen the Chinese market doing really well for luxury brands, including Hermès, but also, for example, Mercedes-Benz. So in the Asian market, they saw sales rise about 40% in the fourth quarter. So that's really where they're seeing the most strength right now.
Interesting. And the U.S., yesterday began a series of hearings into the GameStop stock market drama that saw both small investors and hedge funds lose big last month. What do investors in Frankfurt expect to come out of these meetings?
Well, I think everyone is really watching this as a potential as a potential sign of where regulation is going to be going in the future for these platforms. We've seen really a tremendous growth in retail trading over the past several years, in part because there now are a lot of apps like Robinhood that people can use, normal people, amateur investors, to trade. And that has raised a lot of concern that was really underscored by GameStop. These investors are not being warned that they're not getting enough, that they're not being protected by the companies like Robinhood. So I think that many investors are anticipating potentially stronger regulation for this new crop of trading apps that have become so popular. But we also could potentially see some of the social media companies face regulations as well, or face renewed restrictions. That had been a big point of criticism during the GameStop scandal, is that these investors, these amateur investors, were really congregating on these platforms to decide what they were going to buy, where they were going to buy it, and that is seen by some as a form of market manipulation. So this new technology essentially means that we need more regulation, we need new regulation. So I think everybody is bracing for that.
All right, I will continue to track that to see how it ends. Anyway, thank you, Chelsea. Thank you for the update, and do enjoy the weekend. And the UK downturn was less bad than feared in February, with PMI at 49.8. Let's talk to Juliana now for updates from London. Hello, Juliana. Great to have you.
Hi,
Larry.
Hi, Larry. Yes, good afternoon.
Good afternoon. So UK retail sales tumbled 8.2%, which is a fall more than expected, despite a 35% surge in online sales. How's the market reacting to this?
Well, it's not a great set of data from the retail sales, but it was kind of expected. But of course, that 8.2% is much larger than the 2.6%, which is what Reuters got from surveying economists. December is always supposed to be the blue diamond, that crown jewel in retailing. But it wasn't the case, because most retailers were, of course, plunged into a lockdown. You then get the January sales, where typically you would see tens of thousands, hundreds of thousands of people going out to buy clothes. But unfortunately, there's nowhere to go at the moment, which has been reflected in these retail sales figures, which are pretty abysmal. This is the second biggest plunge on record, the first being in April, when retail sales plunged 18.6%. I think the only sectors that were spared, unsurprisingly, is food and, of course, online shopping. But that wasn't enough to put those figures up. So it's really, really worrying. Got to say, the FTSE not doing that bad at intraday. The all share is up 0.06%. The FTSE 100 is down 0.01%, and the FTSE 250 is up 0.32%. In currencies, the British pound is doing very, very well at the moment. It's almost on a 2-year high against the dollar. It's up 0.11%. It's down, though, against the euro by 0.26%, and down on the Japanese yen also by 0.14%.
Yeah, interesting. And the UK's PMI improved from about 41.2 in January and stands at 49.8 in February, though still less than 50. What drove the index?
Well, it is still less than 50. Obviously, anything below 50 does still show that an economy is contracting. But this is a flash PMI figures. We won't be getting the full data until next week. But, you know, if I'm to quote the Bank of England Governor Andrew Bailey, he says that, you know, Britain and the British economy is getting used to these third national lockdowns, which is a really difficult thing to say. But it appears to be true. The services sector, the all-important services sector, which is 80% of British GDP, is doing particularly well alongside manufacturing. And a lot of economists are saying that this PMI, which is a really good forensic look at the private sector here in the UK, is slowly starting to recover. And perhaps this is going to give us a good example of where GDP in the first quarter is likely to go. However, this has kind of been written off by even the Chancellor. And what we're expecting now is to see a significant rise due to consumer pent-up anticipation for the end of the lockdown, which could be in spring.
So what's the outlook for next week?
Well, we get unemployment figures. A lot of people have been looking at that very, very closely. It currently stands at about 5%. As people have been saying, still historically and internationally quite low. We're expecting a rise of about 5.1%, and that's because the furlough scheme, which we're constantly talking about on this programme, basically the British government for almost a year had been paying people to stay at home. That's been going very, very well. It's extremely expensive. We are expecting on the 3rd of March, where Chancellor Rishi Sunak does deliver that highly anticipated spring budget, for it to perhaps be extended into sectors. But I've got to tell you, not only me, but I think millions of people across Britain are only waiting for one thing next week, and that is my Prime Minister Boris Johnson's roadmap out of lockdown. We have been in lockdown for such a long time. There is mounting pressure, not only from the general public, but from a rising group of Tory MPs who are desperate to get the economy ticking again. Boris Johnson has said that on Monday we will be finally getting a look at this roadmap. So fingers crossed we'll be out and about soon, and I can start having coffee with friends at lunchtime, Maddie.
Exactly. Anyway, thank God it's Friday. Thank you for the update. Do enjoy the rest of the weekend.
Thank you. And
stocks in Asia Pacific were mixed on Friday following overnight declines for the major indexes on Wall Street. In Japan, the Nikkei 225 declined 0.72% to close at 30,017, while the Topix index shed 0.67% to finish its trading day at 1,928. Mainland Chinese markets were higher on the day. The Shanghai Composite rose 0.57% to 3,696, while the Shenzhen Component advanced 0.35% to about 15,823. Hong Kong's Hang Seng Index was fractionally higher as of its final hour of trading, while South Korea's Kospi gained 0.68% to close at 3,107. Stocks in Australia slipped as the S&P ASX 200 closed 1.34% lower at 6,793. MSCI's broadest index of Asia-Pacific shares outside Japan declined slightly. And stock futures were a little changed early Friday morning after Treasury Secretary Janet Yellen said a large COVID relief package is still needed for a full recovery in the U.S. Futures on the Dow Jones Industrial Average rose 31 points. S&P 500 futures traded and NASDAQ 100 futures were higher. Stock markets rallied to records seem to have fizzled as fears of rising rates and higher inflation crept in. The S&P 500 fell for a third straight day on Thursday after a worse than expected reading on jobless claims, as well as weak guidance from Walmart. You're watching Business Incorporated. On Wednesday this week, South Africa began administering the Johnson & Johnson COVID-19 vaccine to health workers following the arrival of the first consignment of the shot. The country's health minister also announced that the previously purchased AstraZeneca vaccines will be offered to the African Union after they were found to have little impact on the mild infections caused by a variant of the virus first identified in the country last year. Let's talk more about these developments with Brian Fegeni, Channels television correspondent in South Africa. Hello, Brian. Thank you for joining us.
Hello, how are you?
Great to have you. And South Africa received the first batch of the Johnson & Johnson COVID-19 vaccines this week and began inoculation. What's the update on that? And aside health workers, who else is getting the jab?
Well, South Africa received 80,000 vaccines of the Johnson & Johnson, and we saw the president and the health minister also getting their first inoculation on Wednesday alongside some health workers. At the moment, the health department is saying they're dealing with health workers who are directly involved and in direct contact with patients. So at the moment, it's just limited to those people since it's only 80,000 doses which are received. And hopefully, as more doses are received, that's when they're going to spread it and give it to more frontline workers, including your funeral parlors, who as well have been complaining, saying they are also in direct contact with people who died of COVID-19. So at the moment, it's just the direct health workers who are in direct contact with COVID patients.
And the health minister announced that the AstraZeneca vaccines gotten initially will be offered to the African Union. What are you hearing about that, and will it be a swap or sale?
Well, the offer, as they've been calling it, it's still very. We're not really sure of the deal. There have been reports and suggestions that South Africa is planning to offer to the AU at maybe half price, but that hasn't really been confirmed. The Health Department and the Minister of Health himself has been really numb about the whole deal, but they're just saying they're offering as if they're going to give them for free. But hopefully, they're going to find a proper price or whatever they want to do with the AstraZeneca vaccine and help other African nations.
Okay, let's talk power now. The National Energy Regulator of South Africa agreed to Eskom increasing its tariff by over 15% this year. How are South Africans reacting to this?
Well, it's bad news on bad news. Recently, there was a fuel price increase, and now there's a Eskom and electricity tariff increase, which is going to impact a lot on the ordinary South African. As Eskom is saying, they want to clear their debt of almost 10 billion rand by 2022, which means that goes down to the ordinary user of electricity, the regular citizens, me and you. So there's been an outcry even from unions who are also planning to have a stay away next week when the Minister of Finance, Tito Mboweni, speech, just to also vent their anger at this whole Eskom price tariff.
I can imagine. Anyway, Brian, thank you so much for the update, and do enjoy the weekend, and hopefully we'll get some good news.
Thank you. You too.
All right, Brian. So still staying in South Africa, audit firm PricewaterhouseCoopers is projecting that the country's estimated economic growth could more than double this year if fewer restrictions are implemented during the winter and completely wiped out at the start of the fourth quarter. PwC outlines economic growth and employment scenarios for 2021 based on different perspectives on the expected third wave of COVID-19 infections. PwC's baseline scenario sees lockdown restrictions ease further in March to level 2, followed by a return to the stricter full level 3 in May, peaking at the level 4 in July. Under this scenario, PwC says the economy would grow by 3.4% overall this year, while growth could expand by 6.7% in an upside scenario, as the country's largest industries will recover some lost ground, albeit fixed investment would remain under pressure. Ghana has been ranked 15th in Africa in the United Nations 2020 Development Index report and 138th globally with an index of 0.611. The ranking was based on three thematic areas, which are life expectancy, education, and per capita income. Norway was ranked first globally, while Mauritius was ranked first in Africa with indices 0.957 and 0.804, respectively. The Human Development Index is a statistic composite index of life expectancy, education, literacy rate, gross enrollment ratio at different levels, and net attendance ratio, and per capita income indicators, which are used to rank countries into 4 tiers of human development. And the group of 7 nations are given a major boost to COVAX, the global initiative to fund vaccinations in lower-income countries, indicating momentum may be building towards a coordinated effort on the part of advanced economies to address the pandemic. The U.S. plans to contribute as much as $4 billion to the initiative, while France will donate 5% of its secured supplies. The UK also will announce its commitment during a G7 call today, while Novavax Inc. Separately says it will supply 1.1 billion doses of its shot to COVAX. Vaccine supply in the U.S. is poised to double, though winter storms across the country continue to slow the inoculation drive. And with oil revenue in sharp decline, Algeria's government is trying to tackle its high import bill by producing more goods at home to reduce spending on foreign food. It wants farmers to grow more bananas and has offered inducement for them to do so. Do take a listen. Apologies, like we don't have that report at this moment. Anyway, that's it on the show today. Thank you for watching. I'm Ladi Williams, and do enjoy the rest of the weekend.